Bangladesh started to invest in SDGs since 2017-19, and it resulted into an increased infrastructure allocation in the national budget. In 2018 and 19, the infrastructure budget stood at $20 billion. As a result of incremental SDG investment requirements, the budget will go up to approximately $150 billion by 2030. Currently, 64% of infrastructure budget is being financed through ODA, concessional loans and non-concessional loans, while the rest is financed by internal sources. There is a need for the country to mobilize further capital to invest into SDGs. This is even more important than ever today within the context of COVID-19. In the absence of constrained external fund sources due to the impact of COVID-19, countries, and especially low and middle income countries, need to develop a mechanism for long-term development financing by mobilizing internal sources within the next few years. Domestic and tap micro savings can be one of the sources for financing development budget. Only 4% of domestic formal savings is being invested in infrastructure at present from formal savings, whereas there are 39% of adults who are saving through informal channels. And tapped pocket like remittances, savings, zakat, and wakaf funds can be tapped to finance SDG achievements. The digital ecosystem is also ready to be tapped for this resource mobilization to take place, with Bangladesh being the 5th largest mobile market in Asia and the Pacific, with 35 million active mobile financial service users out of 75 million being registered and having overall 90 million internet subscribers. How can health education, water and sanitation, roads, bridges, storage facilities, etc., kind of growth infrastructure be supported by leveraging domestic resources in this financially constrained environment to achieve SDGs? Our panel will exactly discuss today that issue. But first, before we start the discussion, I'd like to invite our fellow panelists to introduce themselves. So Dirk, please go ahead and introduce yourself.
Good morning from Belgium. My name is Dirk Vansintjan. I'm a co-founder and board member of a renewable energy cooperative in Belgium called EcoPower. And for EcoPower, I'm the president of the European Federation of Citizen Energy Cooperatives, which is called Rescoop EU. We represent now about 1,500 of these initiatives and about 1 million European citizens. Thank you.
Thank you very much, Dirk. Collen, can you please introduce yourself?
Thank you. My name is Collen Tapfumaneyi. I'm founder and CEO of Escrow Group, which operates in Africa. In 11 countries in Africa, we provide digital platforms to facilitate financial inclusion by both the demand side, that is small and medium enterprises seeking capital, and also giving access to investors from small retail investors to institutional investors. Thank you.
Thank you, Collen. And then my last speaker for today, Anir, can you please introduce yourself?
Thanks, Maria. My name is Anir Chowdhury. I'm the policy advisor of the Aspire to Innovate program of the government of Bangladesh, which started in Prime Minister's office about 13 years ago, and now operates from the Ministry of ICT and the Cabinet Office together, but it spans across the entire government, supported by UNDP and several other donor partners, such as Gates Foundation and many others. Focus is on digital transformation of the entire government service delivery. The aspect that's relevant to today's discussion is the promotion, enablement, and policy reform for digital financial services for the entire citizenry. That's what I'll be discussing today. Thank you.
Thank you very much, Anir and colleagues. So let's hit it with the first question. In your opinion, and maybe I'd like Anir to answer this question, what prospects micro savings have in crowding in domestic resources for SDG-linked investments?
Maria, thank you. I think you started the introduction where you already introduced the audience to number of very critical data. So $20 billion that we need this year for infrastructure investment for SDGs, and that number will actually go up $150 billion in 10 years in 2030. So it's actually going up. You mentioned about 64% from ODA and external resources, but that number has come down. I mean, we actually have seen that external borrowing is getting costlier, and also what we have seen is that it's already costly compared to domestic resources, so about 15 to 20% costlier already, and it's going to go up. With the COVID situation, it's actually going to become worse, as we have already seen, that countries that we depend on for external resources are fighting their own COVID battles for health, for new kinds of social safety nets in their own countries. So we realize that we have to depend on more and more domestic savings. So that's what we're doing currently. So the good news is that there is a lot of domestic savings that's untapped right now. And the number is actually quite high. We're looking at over $60 billion that's in formal savings just this year. About over $40 billion that's in informal savings that go under the mattress essentially. Then about 15 to $20 billion in remittances that come from about 10 million workers that we have in many different countries around the world. And last but not least, we also have a significant amount of zakat that goes into mostly unproductive flows, basically. So we can harness that as well, and that's over $2 billion. So if you add all of this, we're talking about maybe $120 billion just this year that can be harnessed for SDG investments. And this number is about to, will double in the next 10 years. So we're talking about maybe $240 to $250 billion in the next 10 years. So significant domestic savings and zakat and remittances that can be harnessed. And the question is, how do we do that? And that's where digital crowdfunding is one element that we're looking at. So on one hand, we have, as you mentioned already, mobile financial services is one of the hottest growing markets in Bangladesh, even if you compare it to the rest of the world. Internet is on the rise. Digital literacy has extended. I mean, if you look at maybe 12 years ago, we went from less than 1% of internet use population, now over 60% of the people that use internet now. So it's rapid rise. Mobile money has skyrocketed in the last 4 or 5 years. So these are all the elements that we can actually leverage. So the crowdfunding, the idea that we have developed since last year, is that we allow small savers. So we're talking about micro savers around the entire country. So a rickshaw puller, a street vendor that could probably put in maybe $1 to $2 every day, or maybe at the end of the week, maybe $5. They won't wait till the end of the month to put in large amount of money because they'll spend it. So if they can have a mechanism to, just like a top up for mobile phone, just like a mobile money remittance that they send from one place to another, they can actually put it in savings, and they have a lot of formal and informal savings that can be harnessed for this. All these micro savings go into a mega savings, and then a money manager takes that into mega investment for SDGs. So we need $20 billion this year, and we have $120 billion that is untapped. So the math is simple, but the devil is in the details actually. So how do we actually do this? So during COVID, we launched a platform called Agdesh, which means one country in Bangla, our language, national language. And it basically harnessed small donations. We just wanted to test out our theory of whether we can harness small investments or small savings in the form of donations. In this case, obviously, they're not going to get it back, but we wanted to test out our platform, and it was very successfully tested. We had a large number of donations coming in the order of thousands for $10 to $12 each. And that basically made the bulk of the donations. That was then channeled with a number of money managers who managed food, who managed medicines, who managed other community projects in the areas where we needed it the most. So the theory is proven out, and there are many actors in this. And a micro saver or a micro investor in this case can actually specify where this money will be will be invested in. So whether it will go to a diagnostic center, it will go to a school, it will go to a bridge, and financial literacy will also be important here, so that the investor or the saver understands where this money will go and how he or she will get the return. Maybe I'll expound on that a bit later.
Thank you very much. No, very interesting model, and we see how definitely we're using technology to increase those that mobilization of domestic saving, which is critical. Now, give me, in your opinion, what are those critical elements of such of your program for successful implementation? You always talk about financial literacy, but maybe you want to say maybe another factor of success for the implementation of the program?
So if you look at it, let's say for the perspective of the micro savers, so two things are important. I'm going to simplify this. I mean, I won't go into many details, but simplify it. So the first is a platform that is easy to use. So something that they can actually, with their low digital literacy, they can start using. But financial literacy is very important. So the money that used to be under the mattress, it's going to go into an investment and will disappear for some time and may come back with some dividend or with some interest, but they have to understand that. So the financial literacy is very important. Then on the right side of the equation is the investment that's being made and the instruments that we have to create. In the middle, we need money managers. So just in the case of COVID donations, somebody had to manage those donations. So it could not be channeled from a micro donor to somebody in the beneficiary circle directly. So somebody had to manage that. Somebody had to basically make sure the returns will be done in the case of investments. So we need a money manager. In the case of COVID, we had money managers who manage donations, a number of them. But in the case of micro investments, we'll actually bring in different type of money managers in this whole ecosystem. And then regulators have an important role to play, both the telco regulator and the regulator who regulates the banking and the mobile financial services industry, so our central bank. So both regulators have to work together to make sure that this happens. So there are many different segments or many different actors. So central bank, the number of banks and mobile money operators who actually will provide the financial literacy, then money managers of different kinds that we are talking to right now who will actually do this. And obviously several government agencies will also be involved in this whole space as well. Thank you.
Thank you. So a strong money manager, right? Obviously working very closely with the regulator, right? So that we can ensure that there's the right policy in place to make it to flourish, so that the innovation can flourish. And then of course, financial literacy, as we had said at the beginning. Now, let's change a little bit gears and let's go with Dirk. Sorry. What business model, in your opinion, can ensure safe and secure returns to the small savers and small investors? We saw one already, but please, if you can expand on that, Dirk.
Yeah, so it seems as history is repeating itself. So from the 19th century on, citizens and laborers they united. They brought their money together to do something about the problem they had. It might be food at an affordable price, or culture, or whatever. So now also we see this rise of crowdfunding also in Europe, and to me, it's always been very close to what we do as a cooperative. So my cooperative, for instance, was created at my kitchen table here in an old mill. We had to renovate. It was a national monument. And we started with 10 people. And now, almost 30 years later, we are 60,000 people. On average, our members, they contributed €1,000 to the cooperative. We have installed solar panels, hydropower stations, a lot of wind turbines as well. And we now produce enough electricity for about 55,000 households in Belgium. But most of our members, they only contributed €250. So we see that these people, they couldn't probably afford solar panels on their roofs, which used to be very expensive. Now it's cheaper, let's say, but it's still 10 times more than their contribution to the cooperative. So by bringing a lot of people together with a small amount of money in a cooperative, this works, and we see that across Europe there are now more than 3,400 of these initiatives, and where there's giving an enabling framework, a good environment created by the government and the regulator, this can thrive. So the cooperative model is a good model, but of course it's not a guarantee that it works well, because it's also people who are doing it, and you can have good people and people are not that good. So a unique business model that guarantees success is not present. But let's say that the cooperative model, which is not for profit in its essence, is a good model to tackle climate change, to tackle the energy transition we're in now. And the main message I want to do is the energy transition is a unique chance for citizens to take ownership of the energy production of the future. We must stop spending money on oil and gas and coal, even on uranium, and turn to our own renewables, be very efficient with it. And then the money that now flows out of our economy, out of our local economy, out of our own pocket, it stays in our local economy, in our national economy, and it accumulates. So we have now to invest to stop spending money on fossil fuels, and this is a unique chance for citizens to take control, and that's what we want to do with energy cooperatives. Thank you.
Oh, great. Thank you very much, Dirk, for that. Indeed, cooperatives are a very, very good model, and this could be, in fact, one of the best business models for this type of initiatives. Now, let's go to the next question. Collen, how can private and impact investment can leverage through initiatives of this type?
I think looking at it in terms of the various models, there is one major infrastructure that is usually underutilized when it comes to impact investments, financial inclusion, and that is the stock exchange infrastructure, which traditionally has been designed to speak largely to the top end of the investment community. But we are looking at a situation where we combine that concept with the digital platforms that have come up, so that you create a proper ecosystem. What that ecosystem does is to bring the demand side and the supply side together. That is, when you look at the investor side, the micro savings and all that, and all these are channeled through digital platforms and are then structured around an exchange infrastructure which has built-in mechanics to protect investments, to ensure that only qualifying projects are actually invested in, and also to ensure ongoing accountability of the investments. Through that exchange infrastructure, you would then be able to accommodate both public sector infrastructure requirements, as well as private sector investment requirements. For an example, we were involved in the project in Kenya, where the government, for its infrastructure need, attempted or piloted a situation where they could mobilize small investments, just as Anir had mentioned, utilizing mobile money and mobile money platforms, and came down to issuing a bond at an entry level of $30 per each investor. And in the pilot phase, they were able to raise about $10 million for government infrastructure projects. About 500,000 citizens registered to actually make that investment. And the government then came up with a lot of incentives, like removing tax on interest from the investment. So when you look at that, the ecosystem then revolved around stock exchange infrastructure, where the competence and also the suitability of the investment was analyzed by an infrastructure that is designed for that purpose. So for that reason, it will then make it possible for investors, for development finance institutions, for fund managers who are not only looking at just the impact, but also a financial return, not only now, but in the future. So that accountability and infrastructure is what could probably be the link that connects all the dots and all the facets and sides of the investment cycle.
Very, very interesting. In fact, having mobilized $10 million already for infrastructure projects is indeed impressive. Now, what are some of the lessons learned and how development partners, public and private sector, support such initiatives through blended finance models? Maybe Collen, you want to give it a shot, and then other colleagues, as they, yeah?
Thank you. So in the financial ecosystem, there's been this conflict between financial inclusion and making sure everyone is taken on board versus the growing tightening of controls, anti-money laundering, KYC, and all that. So some of the lessons learned are that the design of the risk management framework that is designed for illicit financial activities then has a tendency of undoing the efforts to financially include citizens. For example, to get into the financial system, then you are taken through a whole process of meeting a very stringent requirements. And some of the lessons learned are that there has to be a framework that recognizes such shortcomings, so that you don't scare away the very target market that you want to firstly include and also benefit in an expanded financial services infrastructure. So appropriate regulations, regulations that are also in line with the digital developments, and uniformizing regulations so that you do not have multiple regulators all loading their regulatory demands on a section of the community that is not yet literate in terms of financial services. Then increase connectedness and inculcate also education amongst the people to also be patient in terms of patient long-term returns, and then buttress all this by financial literacy and education. Thank you.
Again, either in Africa or in Asia, the issue about regulation and making sure you have the right regulation in place so that you can innovate properly is key. And again, the issue of financial literacy is very, it resonates with participants, with panelists, and is at the key, at the center of the model as well. Any other things that would like to be added by other panelists? Any lessons learned that you would like to share? Maybe Dirk or or Anir.
Well, we talked about regulation. I think Collen talked about regulation quite a bit. Maria, you also, you used the word right. So the right regulation, but I would also add regulation at the right time. Now, often what happens is because we want to protect, so from a risk management standpoint and anti-money laundering, terrorist financing, so all these issues that sort of, I think, straitjacket us sometimes, that we impose regulation probably at the early stage of an innovation. So what that happens, what that does is you stifle the innovation. So sometimes you need to have some innovation at play, maybe set the boundaries. So maybe some kind of a regulatory sandbox or some kind of a fencing so that you don't go out of, so all kind of experimentation is boxed within that fence and you don't incur undue risk. But you do have to allow some experimentation because if you over-regulate too early, then experimentation doesn't happen, and we don't have all the answers. So the platform that I talked about, we'll have to do a lot of experimentation with that. And we took COVID as an example, opportunity, a lot of crisis, and we needed to mobilize donations. And we said, okay, why don't we just test the platform and see if the technology works, the whole theory works. So on the demand side, we had communities that needed these donations for COVID support, people becoming new poor, losing jobs by tens of thousands on a daily basis. And on the supply side, we had small donors who were willing to support, but didn't have a very easy to use and cost-effective way to make that donation. For let's say they want to donate $10, they want to donate $5. How do they do that to a particular community? So that was the bridging that we did, and we used this crisis period as a time where there was no regulation. So there was no regulation for crowdfunding, and we said, okay, why don't we try this out? And we did. And the regulator did not really, because the regulator had other business to worry about. So we tested this out. So I think what basically what I'm trying to say, and regulators who are listening, I think should keep an open mind that we want to have innovation, experimentation, give us some answers to questions. We have the questions, but we may not have the right answers yet. And if you over-regulate, we may not ever get the right answers. So that's basically what I'm trying to say. So don't over-regulate, don't regulate prematurely.
No, absolutely. And I was personally invited as a speaker last week by the Nepal Rasta Bank, and there were all the central banks in the region. And one, in fact, a very lively discussion was in regards well, the linkages between financial inclusion and financial stability, and obviously regulation for fintech came into the question, right? And I think this is we need to think about the right regulation, but we need to also think about the need for innovation, right? Because we cannot, it is not the time to put brakes on financial inclusion. On the contrary, it is a time to go deeper, right? In particular, right now, where COVID-19 poses so many challenges in so many fronts, and it proves once and more that digital needs to be given the proper place, right, in the economy, so that we can definitely innovate more and mobilize more savings and contribute more and more to the achievement of the SDGs. So I think that it's indeed very, very important. Dirk, you want to maybe say something about lessons learned? Yes, sorry.
So I was just pointing to the vaccine development. I mean, regulation did not allow us to develop vaccine anywhere less than maybe within 5 years, 7 years, perhaps. But we are developing in months now. Right? So that's a good example of
very good analogy. Yeah, analogy. Yeah.
Because our back's against the wall. It's a life and death situation.
Absolutely.
We in Europe.
Dirk, you perhaps want to say something.
In Europe, we often use the image that often regulation are made for the big players. And we with the energy cooperatives we introduced at the European Commission the image, we're cyclists and we need a bike lane for what we do. You don't force us to drive on the highways among the trucks and the very fast cars. We need a proper, also when they tender support, we have to compete with, for instance, a small energy community have to compete with their solar panels on a school with a big company who has thousands of projects and who can buy solar panels cheaper. So in order to allow citizens and groups of citizens to energy communities to take initiatives and to speed up the energy transition, we have to have appropriate regulation. And we need bike lanes, so for our projects. So that's also we're also confronted with these regulations on laundering of money. But if you are a cooperative with 60,000 members and they want to know who is the final beneficiary, it's a lot of work to input all these details. Yeah.
No, definitely. Maybe add something to close.
Sorry, you broke up a bit. I guess you are referring to me?
Yes.
Okay,
I was asking if you wanted to ask, yeah, if you wanted.
Yes.
To close.
Yeah. So I just wanted to add that in all this, when it comes to enabling environment to make this initiative have the right impact and reach the intended targets audience, the regulators, policymakers, governments, and all that, they probably don't have much to fear, except that they need to also catch up with the developments in the technology in the fintech space, because most of the information is now digitally available. Most transactions are traceable in one form or the other. So what is just needed is to bring in some kind of policy framework that integrates all these activities into one big data platform that speaks to the everyday lives of citizens. Out of that, they can then harvest all the information and controls and analysis that is required, so that the regulation is a one-stop single window process, where an initiative, when it comes up, it doesn't have to be subjected to the monetary authorities, that is the central bank authorities, the capital markets authorities, the insurance authorities, the agricultural authorities. Just through one single window, if processes can be approved and data harvested from big data, then that will unlock all these opportunities for sustainable development goal investments. Thank you.
Well, thank you very much to our panelists for today. I just wanted maybe to close this panel with reiterating the importance of savings and micro savings and new technologies to mobilize to the achievement of the SDGs. I think the more and more we are able to innovate to increase savings mobilization at the country level, the more and more we will be able also to have minimize it towards SDG investments. And the panelists are obviously reiterated today the importance of digital technology to increase that mobilization of savings. I don't think there are any questions from the audience. Perhaps it is difficult. Yeah, exactly. So what maybe I just wanted to thank all the panelists, Dirk, Collen, and Anir, for having joined us today in this very first day of the Singapore FinTech Festival. Thank you very much to the organizers. Ashraful, thank you for having organized the panel as well. And thank you also to the colleagues, Pallavi, which is no longer in the panel, but thank you very much also for all your logistic support throughout the session. I think with that, I am just going to close the session. And it has been a pleasure to join today the panel.
Thank you, Maria, for moderating this panel, and thank you, honorable panelists, for putting your insights. And we from UNCDF and UNCDF Bangladesh, we thank you very much for joining us and supporting our initiative for this Dhaka satellite event for the Singapore FinTech Festival. Thank you, and we will be leaving the session now.
Okay.
Thank you.
Bye-bye.
Thank you very
Bye-bye.
much.
See you.
Bye.
Bye-bye.